What if you checked your bank account this week and noticed something that confused you? Not one government deposit, but two arriving within days of each other. Your CPP came in on Wednesday, the way it always does. Then 2 days later, a second deposit appeared with a different description code and a different amount, and you sat there staring at your phone screen, wondering whether the government had made an error, whether you were supposed to report it, whether keeping it would cause a problem with your CRA file, or whether this was simply something that happens in 2026 that nobody explained to you when you retired. What if that confusion, that moment of not knowing whether good news was actually good news, caused you to call Service Canada and sit on hold for 50 minutes only to be told by a representative that everything looked normal on their end and that you should speak to the CRA if you had concerns about your tax situation? And the CRA told you to speak to Service Canada. And you hung up the phone no clearer than when you started, and quietly decided to just leave the money alone and hope for the best. This is not a hypothetical invented to create anxiety. This is the exact experience that thousands of Canadian seniors are having right now in 2026 as CPP, OAS, and GIS payments arrive on overlapping schedules with different deposit descriptions, different amounts, and different calculation rules that nobody has ever sat down and explained to them in plain language. Most seniors receiving all three programs have never been shown a clear breakdown of what each payment is, why each amount is what it is, what the deposit description codes on their bank statement actually mean, and most importantly, what combination of these three payments they are actually entitled to receive versus what they are currently receiving. That gap between entitlement and actual payment is costing Canadian seniors real money every single month. Not because the government is withholding anything deliberately, but because the system assumes you understand how three separate programs with three separate calculation rules and three separate eligibility criteria interact with each other to produce the total monthly income depositing into your account. And nobody ever taught you that. Until today. Before I walk you through exactly what CPP OAS and GIS are paying in 2026 and what you need to verify before the next payment date, subscribe and turn on notifications right now. The May 28th payment cycle is approaching, and Service Canada will not send you a personal explanation of what changed. Now let me show you what is actually happening. My name is Linda, and I have spent 14 years helping Canadian seniors understand not just what their CPP, OAS, and GIS payments are, but why they are the specific amounts they are, how those amounts are calculated, and what the difference between what you are receiving and what you are actually entitled to looks like in real dollar terms every single month. I started this channel because the information gap between what Service Canada publishes in official documentation and what the average Canadian senior genuinely understands about their own benefits is wider than it has any right to be. And nowhere is that gap more expensive than in the area of payment amounts, because a senior who does not understand how their benefit is calculated cannot identify when that calculation is wrong. Let me start with CPP because it is the program that produces the most confusion around payment amounts and the one where the difference between the maximum and the average is most misunderstood. According to Service Canada's official CPP program information published on Canada.ca, the Canada Pension Plan Retirement Pension is a monthly taxable benefit that replaces part of your income when you retire. The maximum CPP retirement pension for someone who begins collecting at age 65 in 2026 is approximately $1,364 per month. That is the number most people have heard. That is the number that appears in news coverage of CPP. And that is the number that creates the most widespread misunderstanding among Canadian seniors, because the average CPP retirement pension actually received by Canadians in 2026 is significantly lower, closer to $750 to $850 monthly, depending on your contribution history and the age at which you began collecting. The reason for that gap between maximum and average is straightforward but almost never explained clearly. Your CPP amount is calculated based on how much you contributed to the plan across your working years and for how long. The maximum is only received by Canadians who contributed at the maximum rate for approximately 39 years continuously. Most Canadians, particularly women who took time away from the workforce for caregiving, workers who had periods of self-employment, and anyone who worked part-time for portions of their career, receive a CPP amount that reflects their actual contribution history, which is almost always lower than the theoretical maximum. And understanding your specific CPP amount is the essential first step before understanding how it interacts with your OAS and your GIS, because those interactions are where the real money is hiding. The second program every Canadian senior needs to understand clearly is old age security, and OAS is where the most widespread confusion exists around eligibility, amounts, and the specific rules that determine how much you personally receive versus how much your neighbor or your sibling receives, even if you are the same age and retired in the same year. According to Service Canada's official OAS program guidelines published on Canada.ca, old age security is a monthly payment available to Canadians aged 65 and older who have lived in Canada for at least 10 years after the age of 18. Unlike CPP, it is not based on your work history or your contributions. It is based on how long you have lived in Canada as a Canadian resident after turning 18. The maximum OAS payment for seniors aged 65 to 74 in 2026 is approximately $730 per month, according to Canada.ca official quarterly rates. For seniors aged 75 and older, that maximum increases to approximately $802 monthly, a 10% increase that was permanently legislated for the 75-plus age group, and that took effect in July 2022. But here is the number that matters more than the maximum for most people watching this video. The average OAS payment received by Canadian seniors is closer to $650 to $690 monthly, because partial OAS is paid to seniors who lived outside Canada for portions of their adult life after age 18. For every year of Canadian residency after 18, up to a maximum of 40 years, you receive 1/40th of the full OAS amount. A senior who lived in Canada for 30 years after turning 18 receives 75% of the maximum OAS, not the full amount, and that partial calculation is something Service Canada applies automatically based on your residency history without always explaining the formula clearly to the person receiving the reduced payment. Here is the insider detail that most OAS coverage completely skips over, and this is the one that drives the most comments on this channel every single time I mention it. If you deferred your OAS past age 65, meaning you chose to delay starting your OAS pension, your payment amount increases by 0.6% for every month of deferral up to a maximum of 36% at age 70, according to Canada.ca official deferral calculation guidelines. That enhanced OAS amount is then permanently locked in for the rest of your life. And it is fully indexed to inflation through quarterly adjustments every January, April, July, and October, which means the decision you made about when to start OAS is still affecting your monthly deposit amount right now. And many seniors have never been shown the calculation that explains exactly how much their timing decision was worth in lifetime dollar terms. And this is exactly where OAS connects to GIS in a way that surprises almost everyone. The third program is GIS, the Guaranteed Income Supplement. And this is the one that I want every Canadian senior watching this video to pay the most careful attention to, because GIS is simultaneously the most valuable benefit available to lower-income Canadian seniors and the one most frequently unclaimed, misunderstood, and incorrectly calculated. According to Service Canada's official GIS program guidelines on Canada.ca, the Guaranteed Income Supplement is a monthly, non-taxable benefit paid on top of OAS to Canadian seniors whose annual income falls below a specific threshold. Non-taxable means it does not appear as income on your CRA return. It does not affect your tax bracket. It does not trigger the OAS clawback. It arrives in your bank account in addition to your OAS and your CPP, and it costs you nothing in tax consequences to receive it. The maximum GIS payment for a single senior in 2026 is approximately $1,065 per month, according to Canada.ca official program rates. But as with CPP and OAS, the maximum tells you the ceiling, not the reality. The average GIS recipient in Canada receives somewhere between $500 and $650 monthly because most recipients have some CPP income that partially reduces their GIS entitlement through the income reduction formula. That formula reduces GIS by 50 cents for every dollar of non-OAS income above a small annual earnings exemption, meaning every dollar of CPP you receive reduces your GIS by 50 cents. The reduction is real, but it is not elimination. A partial GIS benefit of $500 monthly is still $6,000 annually that belongs to you, and that a significant number of qualifying Canadian seniors are currently not receiving. According to Service Canada's own program, data approximately 2.2 million Canadians receive GIS every month in 2026. But Statistics Canada data confirms that a substantial number of seniors who qualify for at least partial GIS based on their income level have never submitted an application, most commonly because they assume their CPP income disqualifies them entirely, or because nobody at Service Canada explained at the moment of their OAS application that GIS was a separate program requiring a separate eligibility assessment. Canadians who work with retirement financial planners already know that GIS applications should be submitted simultaneously with OAS applications at age 65. Their advisors flag this automatically. Most Canadian seniors find out about GIS only when a neighbor mentions it at a community breakfast or when they stumble across a video like this one. Now you know before that happens, and what I am about to tell you next is the hidden connection between all three programs that most Canadian seniors never discover until it has already cost them money. Now here is the cross-program connection that most coverage of CPP, OAS, and GIS payment amounts completely misses. And this is the piece that ties everything together in a way that will change how you read your bank statement every single month going forward. Your three government payments do not arrive and sit independently of each other. They are connected through a calculation chain that means a change in any one of them creates a ripple effect through the other two in ways that Service Canada does not automatically explain when those changes occur. Here is exactly how that chain works in practical dollar terms. Your CPP amount is determined by your contribution history and your start age, and it is fixed once you begin receiving it. That fixed CPP amount flows directly into your annual net income calculation for GIS purposes. Every dollar of CPP reduces your GIS entitlement by 50 cents. Your OAS amount is excluded from that GIS income calculation entirely, meaning OAS does not reduce GIS at all. But your OAS deferral decision affects your total monthly income, which affects how close you sit to the GIS income threshold and how much GIS you qualify for in the first place. And your GIS amount, being non-taxable, does not affect your CRA-assessed income, which means it does not trigger OAS clawback and does not push you into a higher tax bracket. Three programs, three separate calculation rules, one interconnected system that produces your total monthly government income, and that system can only be optimized if you understand how all three pieces fit together simultaneously. Here are your 3 action steps for this week. Step 1. Log into your My Service Canada account at Canada.ca in Employment Social Development and verify 3 specific numbers: your current CPP monthly amount, your current OAS monthly amount, and whether an active GIS payment is on file in your name. Write all 3 numbers down, then add them together and compare that total to your actual monthly bank deposits. If the numbers do not match, something in your file needs to be investigated before the next payment date arrives. Step 2. If you are over 65 receiving OAS and you have never applied for GIS, or you are uncertain whether your current GIS amount reflects your most recent income level, contact Service Canada directly at 1-800-277-9914 this week. Ask them specifically to confirm your GIS eligibility based on your current annual net income and to verify that your most recent tax return has been received and assessed by CRA. That single phone call could identify a payment gap that has been quietly costing you money for months or longer. Step 3. Share this video with one person in your life who is receiving CPP and OAS, but has never been clearly shown how GIS fits into that picture and what their total monthly government income entitlement actually looks like when all three programs are correctly calculated together. That person may be leaving hundreds of dollars on the table every single month without realizing it. One important warning before you go. The CRA will never demand immediate payment by phone or request gift cards as settlement for any balance owing. If you receive this type of call, hang up immediately and report it to the Canadian Anti-Fraud Centre at 1-888-495-8501. Did you know before today exactly how your CPP amount directly reduces your GIS entitlement by 50 cents for every dollar, and that your OAS amount has absolutely no effect on your GIS calculation at all? Drop your province in the comments and tell me, when you first started receiving all three payments, did anyone at Service Canada sit down and explain how these three programs interact with each other, or did you have to figure it out on your own? I want to understand how many Canadian seniors are navigating this system without the complete picture. What we covered today reflects confirmed program rules and current payment amounts in effect for the 2026 benefit year. The May 28th CPP OAS and GIS payment date is approaching, and quarterly indexation adjustments are scheduled for July 2026 that will affect all three program amounts simultaneously. Service Canada will not send you a personal breakdown of how those adjustments interact across your three payments. Subscribe now so that information reaches you before it affects your monthly income. You spent your entire working life contributing to this country. You earned every dollar of these benefits. I am Linda from Linda's Canada Pension Guide, and I will see you in the next one. Take care of yourself.